Are you joining first?
Go get my headphone.
Hello, just give it a couple minutes as people start to join in here. Awesome, great to see everyone joining me today. So for those that don't know, my name is Irfan Molodina, managing partner here at RMI Professional Corporation. So what we've started is we did this last quarter, and it's something that we'll be doing going forward every quarter, but just a quick 30 to 60 minute live Q&A session with myself on anything tax related. So happy to help answer any questions you might have along the way. And I know especially this time of year, we're in beginning of February, so most important thing right now that everyone's probably paying attention to is personal tax season that's coming up. So just keep in mind on that side, personal taxes, most important things to really be paying attention to. Of course, this year there is a new deduction that's available for people who are subscribers to any media outlet. So for example, if you're a subscriber for the Calgary Herald, you should be getting a slip for that, and you'll be able to actually write that off as a deduction for yourselves going forward. But otherwise, you got to remember your typical expenses that you're allowed. So medical expenses is very important. As of course, if you do any RSP contributions, as well as your typical slips that you should be receiving in terms of investment income. You want to make sure you're keeping track of all of those records. For those of you that do have a lot of investment income, you are able to write off expenses for management fees, for example, for investment advisors. Another common deduction that's available for people, not many people know this, but if you have a safety deposit box or security deposit box, you can actually write that off as an expense. Of course, if you've got investment income, you can even write off your accounting fees if you get somebody to prep your tax returns. So you do have some really good options on that side. So as more people join in here, if you have any questions, feel free to just type them in the comment box below. As questions come up, I'll start answering them. We did get a couple of clients actually in advance send over some questions, so I will for sure start with those ones. And then as they come in, just feel free to type at the bottom. So our first question came in: as a self-employed contractor, what is the best amount of income to declare to CRA in order to maximize the pension? So as a self-employed contractor, basically you want to make sure you're reporting all your income and take in any deductions that you can write off against it. So our CPP, the maximum CPP income you can get or that you contribute in is around $56,000. So if your income is coming in at that amount, then you'll be maximizing your pension. Anything above that as well. And it is something that you want to make sure you're not showing extra income for no reason, because you'll be paying some pretty hefty taxes on it. So it's something we want to make sure you're balancing out, taking the deductions you can take and balancing your CPP contributions versus your actual income and that we're reporting on your taxes. How is the government pension calculated, and what factors affect the pension amount? Years of contribution, amount of contribution. So another good question. The pension calculation, what I typically recommend to my clients is I say go to Service Canada, and you can actually request a payout statement. So you can tell them, based on how much I've contributed in the past, how much would my pension be today? And based on that, they'll be able to tell you with the amount that you've contributed. Typically what I find is once you hit 28 to 30 years of contribution, the benefit starts to reduce a little bit because they'll always look at your total contribution, but the more you contribute, you'll start getting closer and closer to that maximum amount that you'll get. So the best bet on that side is start by requesting to Service Canada. how much you have actually contributed, what your payout would be today. And then from there, you can start to plan around how many more years you got to contribute. And it's an important thing to consider because you might have income versus expenses. You might have, you could take dividends versus salaries. And of course, if you're a business owner and you're taking salaries, you're contributing into CPP. But if you're taking dividends, you're not. So it is something to make sure you are considering along the way. For those that just recently joined, welcome. I'm Finale Moladina, Managing Partner at RMI Professional Corporation. As I had mentioned, please do start asking questions, and I will start to answer them as we go through them. So I've seen a couple come in already, and I will start going through those. So the first one was, if I run my own business, but I do it personally and not through a corporation, is my personal tax deadline the same as everyone else? Really good question there. And there's two components to it. So if you're a sole proprietor business operator, your personal tax deadline is different. However, you have to remember April 30th, your taxes are still due. So if you do owe any taxes, they are due by April 30th, but you do have till the middle of June, so June 15th, to actually file the tax return. So hope that answers the question there, but it is yes and no, because your taxes are still due at the same time, but you do get a little bit of extra time to actually do the filing. Another question there was, how many years can we carry forward the tuition credits? So tuition credits are something that's very unique, and what happens with them is they get used up based on your income levels. So they do carry forward, but you can't choose how much you're going to use in each year, if that makes sense. And so what will typically happen is, let's say you finish school, you finish your tuition, then you start working full time. You might end up using all those credits within a couple years, because they will basically reduce your income, or they'll be used against your income every single year until they've been used up. So they do carry forward until such time that you have used them up in full. Does a person have to file taxes if they received EI last year? Anytime you receive any income in Canada, you are required to file taxes. So it doesn't matter what type of income you've earned. Even if you only had EI income, you do need to still report it. Good chance that if that's the only income, you might not owe money. You may be entitled to a refund if some of the taxes were withheld, but you do absolutely have to file your taxes every year. Thanks for all the questions. Keep them coming in. I do have another one that was sent in advance, so I'll answer that one next. For self-employed people, what percentage should be paid as dividends and what percentage is income? So that question's a little tricky there, because it is, I think the question's referring to dividends versus salary. So if you are a corporation, as I previously had mentioned, you do get the option to either file or pay yourself on salary, in which case you do standard deductions, you pay CRA on a monthly basis for the taxes you're withholding, and you take a net pay. Very simple, of course. Your other option is dividends. When you do dividends, what happens is you basically draw money from the company. We'll look at how much you have drawn, and once we see, okay, you've taken out $50,000 for the year, we'll record a $50,000 dividend that you then pay your personal taxes on. The difference between the two, there's a few. Salary, like I had mentioned, you pay into CPP. You are EI exempt if you're the owner of the business. But on salary, it does also increase your RSP deductions, your limit for RSP deductions. So those that like to contribute into that, salary is a good option there to help increase your limits. And then there are some childcare deductions that are available only to those that are salaried, as dividends are seen as investment income. So each situation is unique, I would say, and I can't answer that generally in terms of how much to pay as dividends, how much to pay as salary. Some of the strategies we've used is some people go 100% one way or 100% the other way. Some people will say, I'm going to maximize my CPP based on salary and then take dividends in addition. Some people will say, I need X amount of salary for the year, That's to cover my living expenses, and then if the business goes well, I'll do an additional dividend. So a few different options to think about, but for sure that's something I'm more than happy to chat with you on an individual basis when those in determining your situation and what works best. I got another question that came in here. What would I want to set up a trust rather than a holding company? So that's a good question there for sure. Or when would I want to set up a trust rather than a holding company? It's a family, so I'm sure this is referring to a family trust, and a family trust is a vehicle that today still gets used to help with a little bit of income splitting on a sale of a business. So one good example is everybody's entitled to their capital gains exemption. What that is when you sell shares in a private corporation, today you get about $892,000 tax-free. Now, the key of that is it has to be the sale of shares. So for example, if you're running a business and you might have a spouse with a couple kids, if you have a family trust, you can actually multiply that exemption by everybody that's in the trust, as long as you are paying them the money from the proceeds of sale. So in terms of your question, when would it be better to set up a trust rather than a holding company? I don't think they're either or. I'd say sometimes you might even have both. But a trust makes sense when you're in a big growth stage for your company and your end game is to take the company public, sell, or do something along those lines, because you can actually multiply your exemption and get a bit more benefit down the road. Some more questions. So as you guys come in, please do write your questions here. I'm more than happy to help answer anything along the lines of accounting, tax related, and even happy to answer any other questions if I can. So the next question was, do I have to pay taxes on my side hustle? I love that. So CRA does actually define what a hobby would be considered. But for the most part, if you are taking and selling and earning any type of income, yes, you do need to include that as part of your taxes. One key element with that though is because, for example, if on the side I decide I'm going to go sell some pencils, nice colorful different ones, and that becomes my little side hustle, I guess the key with that is, yes, that becomes income for me, but it means I'm running a small sole proprietorship business. And so when you run a sole proprietorship business, the nice thing is you can also write off a lot of expenses against it. Now, if CRA does determine the activity you're doing to be more hobby related, you don't get the deductions. And so that's where a lot of times when you are doing something on the side, it is good to actually start creating it as a business and treat it as a business. Report your income as you're supposed to. Take any deductions against it like we can. And the key with that is, if you start to earn more than $30,000 a year, then you are required to register for GST as well. Another question there. If someone's paying off his student loan, how does it affect his taxes? So that's a good question for sure. So in Canada, or in Alberta specifically, a lot of people will get the Canada student loan, they'll get Alberta student loans, or you'll get private student loans. Any student loan interest is actually a tax deduction on your personal taxes. So you'll typically, if you have an Alberta student loan, for example, you'll get a statement every year showing the interest you've paid. For those of you that don't, please do keep that and provide it to your tax preparer, or make sure you use it in your tax deductions, because it does give you a little bit of a deduction. It doesn't necessarily become a huge amount sometimes, but some people who have larger student loans for post-secondary education, it can add up for sure. So it is something that you do get a tax credit for. Another question that was sent in. We own a vacation property in the US. We'd like to rent it out for part of the year. Are there any tax implications we should know about? I love questions about the US. being living in Canada, I find we got a glorious opportunity to be able to take advantage of the US market that is obviously 10 times the size of Canada's population. And so there is a lot of opportunity for Canadians there. But when we do business in the US, we got to make sure we set up the proper structure. So in terms of this question, if we own a vacation property in the US and you have it in your personal name, which most likely you would in this situation, I'm guessing, you do need to register with the IRS. And so what we are required to obtain is what's called an ITIN, which is an International Tax Identification Number. Think of it as your SIN number or your SSN number in the US. And once you have the ITIN, that's what you would be using to file that income on your taxes in the US. And so a lot of people say, well, okay, I'm paying taxes on that in the States, then do I just leave it off in Canada? And the answer is no. So the way things work when you've got income coming from the States, you file in the States, you pay taxes in the States. In Canada, if you live in Canada, you're required to report worldwide income. What that means is you're still required to report the income from the rental that you're getting in the US. But instead of getting double taxed, what happens is in Canada, you get a tax credit for the taxes you've paid in the US. So you don't get double taxed on the situation, which is really nice. But it is important that you are reporting that income because it is income for yourself no matter what. I do get this question a lot with people saying I want to invest in the US as well and have multiple properties. I might do some Airbnb rentals down there. So there are corporate structures to look at as well down in the States. The most important thing when we're looking at corporate structures in the States, a lot of times you call up an American accountant or an American tax lawyer and say, well, I want to start up a company. Traditionally in the US, they use a lot of LLCs as their structures. So it's similar to a corporation. They're called limited liability corporations. And a lot of times Americans will say, yeah, I'll set you up with an LLC. As a Canadian, it's really important to know LLCs can be very dangerous for you because there is double taxation that can happen. Canada views it as a corporation, so they tax you as a corporation. But in the US, they're considered flow-through entities. So a lot of times the income can flow out to you personally. And so because the incomes are treated differently in both countries, you don't actually get that foreign tax credit I was talking about. So anytime you want to do anything in the US, if it's going to be whether it's you as an individual owning some property or you want to look at a corporate structure, for sure talk to a tax professional. We're always happy to help here. We do have a US CPA in our office as well, so more than happy to be able to answer those questions more specifically in your situation. Another question there is what is taxation liability on sale of digital assets like cryptocurrencies? I love cryptocurrencies. So the good thing is a lot of people have made a lot of money in cryptocurrencies, but the key with them is they are still taxable at the end of the day. There's two things we've got to consider here. What is happening with the crypto that you own? And by that, what I mean is, are you holding it long term? Are you trading it? Are you doing multiple trades a day? Right? And the second piece of it is, what are you trading? Is it going to be crypto to crypto, crypto to US currency, crypto to Canadian currency? All of that comes into play. So the key with all of this is if the typical model that we look at for cryptocurrencies is similar to any other investment. So if you buy a stock and you hold it long term, you'll get capital gains tax on it when you sell. Same thing happens with cryptocurrency, is if you buy cryptocurrency, you hold it long term, you don't do a lot of activity or trading with it, you pay capital gains tax, and it's very simple. The one key element to keep in mind is when I'm talking cryptocurrencies, I'm talking each currency. So if, for example, those familiar with cryptocurrencies, if you have Bitcoin and you trade it for Ethereum, that counts as a transaction. So that can trigger your capital gains. It's not only when you go back to something like Canadian or American dollars. So you got to remember, if you're exchanging crypto to crypto, it ends up actually having an impact on your capital gains. The second element, if you are very heavily invested in cryptocurrencies, if you do multiple transactions, this is becoming your main business, and this is how you're earning a lot of your income, CRA can rule it to be actually active income for you. And what happens in active income is that will become, if you own it in your personal name, for example, that becomes treated like business income. Okay, this same situation applies for things like mining. If you're doing mining, you can write off your equipment you buy for it, but it becomes regular business income for you. Some people who are more familiar with crypto, they're familiar with things like staking. Staking is the same thing. When you're lending your cryptocurrency and getting a return, a lot of times that's considered active income in terms of the activities that you're doing. So cryptocurrency, it is becoming a big thing. You need to be careful with the taxation for it. CRA is starting to build their resources so they can start to track and see who's invested in it. So if you do need any assistance, for sure reach out. It is something that I'm familiar with, of course, and we got the skill set in the office to be able to help out there. Sorry, just catching up on some questions here. So again, for those that have recently joined, it's Air Finale with RMI Professional Corporation. We do all things accounting and tax. So if you ever have any questions, feel free to reach out. Those that are watching today, please type your questions below and I'm happy to answer them while I'm here. So the next question is, how do you incorporate a company? So incorporation requires a couple different things. For sure, you can reach out to an accountant or a lawyer and they can help you with the whole process in detail. We do assist on that end as well. But the process is twofold. One, through a registry office, you can actually get your corporation set up. A lot of people will go and do that and say, okay, now I've got my corporation, I'm running. What I advise is you always want to also get a minute book created. What the minute book is, it actually holds the bylaws for the corporation. It holds your share certificates and makes sure those are issued properly. It talks about who the directors of the corporation are. It has your minutes to actually formally get the company created. And the reason that's important is anytime you want to do major transactions with your company, your minute book is the foundation for that. So if you're looking for investors in the future, if you try to sell your company, if you go get bank loans, you're going to need your minute book. If it's something you save till years down the road before you actually get it created, the problem is that your cost to get it created are going to be significantly higher. So it's not a very expensive process. I'd for sure say, you know what, if you need assistance on that end, let me know. Or let our firm know, and of course it's twofold. Go to the registries, get that piece set up, and the second component is making sure you get the minute book and get that completed correctly. Another question here: what should you do if you owe taxes that you cannot pay at the moment? So yeah, a common situation. We've all had gone through COVID here recently, and I know for some people might have lost some employment, might be struggling. And if you do owe taxes, and this applies on the corporate side as well, if you're a small business owner, step one is making a payment arrangement with CRA. You will still incur interest, but a lot of times they will give you some flexibility and do an arrangement with you that you can pay. If you can start paying a little bit every month, usually you'll be okay as long as you can get it cleared up over time. If you end up in a situation where you feel I can't pay anything, I'm really struggling, you do have two different options there. One is a credit proposal, where it's a step before bankruptcy, and you negotiate your debts essentially to a lower amount that you can afford based on the income you're earning. You pay that over a period of up to 5 years, and once you've paid that negotiated amount out, you actually exit the proposal and can start to rebuild your credit. And of course, if you're at a position where you're like, I can't afford to pay anything, I have no income coming in, you may have to look at bankruptcy as an option as well. And that one, it does depend on your situation, how much you owe, and there are some other specific complexities there. But we do have people that we work closely with that can assist in this manner. So if you are in that situation, don't hesitate to reach out. We're more than happy to connect you with the people that can assist further. What happens if I file my taxes after the deadline? So this is a good question as well. Obviously, taxes are due, so because it's personal tax time, personal taxes are all due by end of April 30th. If you're a sole proprietorship, you do get an extension till June 15th, but as I mentioned earlier, you do have to pay by April 30th any taxes you do owe. So what happens is if you file after your deadline, basically you are in a situation where you could incur penalties. CRA's penalties on the personal side are, if you're late for the first year, it's 10% of what you owe. If you're late a second year, it's 20%. And if you are a repeated person who continues to file late and you do owe taxes, it could go as high as 50% of what you owe. If you are in a situation where you are getting a refund, you're off the hook. You're not going to incur those penalties. If you have prepaid your taxes, you're going to be okay. You're not going to incur the penalties. But if you file on May 1st, for example, and the deadline's April 30th, the penalty automatically kicks in. And so for everybody, I would say get your taxes in early. The same situation applies on the corporate side. Your corporate deadlines are 3 months after your year end, your taxes are due, but the key date is 6 months. And 6 months after your year end is your tax filing deadline. If you're after that, the same penalties will arise. So it's very, very important to make sure your taxes are filed on time. If I make a mistake or forget a deduction on my taxes, is it too late? The answer is no, typically. You do get up to 10 years to make amendments and adjustments to your return. You do have to make sure you provide your backup and support to CRA. So for example, if you say, hey, I forgot to include some receipts from my last year's filing, we would do an amended return, submit those receipts to CRA, and then they can do an amended return and you can make your money back there. If the situation is such where you forgot income, let's say, that you needed to report, there is a program called voluntary disclosure program. And so the voluntary disclosure program is really nice because you could save interest and avoid late filing penalties on any missed income that you need to report. So for example, it might be where, hey, I went overseas to work, but I was deemed to be a Canadian still because my family was living here and I still had my house and my car and I'd be coming back every single month. And in that situation, it's really nice because if you have forgotten to report your income, we can do the voluntary disclosure program, save you any interest in late filing penalties, and the only thing you'd be subjected to would be any taxes you would actually have owed. So there is a nice program that CRA has on that side. So with that, I think my time is up for today. So once again, thanks for joining. Thanks for asking those questions. It's Air Finale with RMI Professional Corporation. We're always here for you. If I didn't get to your question or you got some others, feel free to send them in. Feel free to email myself or any of my colleagues at the office. For those that are clients of ours, you know, we're always here, we're always available, and we're happy to help. So thank you again for tuning in and looking forward to talking to everybody soon. Take care.